Hello and welcome back to another video. My name's Jared, for those of you who don't know me, and my hobby is investing, and I want to share that with you guys. In this video, we're going to kind of go over what's been going on the last week, some of my buys and sells, my price points, things along those lines. If you enjoyed the video, and do me a favor and hit that like button, subscribe for more videos, and go back and watch some previous ones. There's a lot of good info in it. Let's get into it. So once again, we're covering some of my buys and sells over the last week, and we're going to go over some info as to what is going on with the market. And to start with the market, we're in peace ceasefire discussions with the current ongoings, and hopefully that's going to open up that strait again. Um, that's always going to spark some good news with the market. This last week, the pretty much most of the market was up except for some of the energy stocks and the SaaS companies, in which case we're going to discuss some of those today. And we're going to get started with our first stock, which actually was a sell. That's going to be ConocoPhillips. I ended up selling ConocoPhillips on April 1st. I actually got stop lossed out. In my previous videos, I talked about setting a stop loss on some of these gainers that you might not actually be interested in, but you're kind of riding the market. It's never bad to pull profits, in which case I did end up pulling profits. I bought ConocoPhillips at like $98 a share. I know it was only 10 shares. Everyone's not going to be all in, all or nothing. It was just kind of a insight that I had, or I was researching and thinking that ConocoPhillips was gonna do pretty good, and then the war sparked off, and so kind of a little bit of luck in there. But do your own research. That's what helps you and guides your investing. So with that being said, I ended up getting stop lossed, which is absolutely fine. I retained some gains. ConocoPhillips is currently at like 122, so I actually ended up on the better side of that. I didn't sell at the top. Very hard to calculate that. That's why we utilize the stop losses. I ended up selling a 300 call for Amazon. I sold two at 420 per, and you'll see in a little bit what I bought those for. Pretty good margin of or gain on it. I sold seven more contracts at $4, the same Amazon calls. I ended up selling 275 calls at three of them at 11.25, and AMD calls at 340 calls. I sold at $11 per. I sold five of them, and I sold my service now on April 7th at 102.91. You'll see why in a little bit here and why it's back on my buy radar. Once again, SaaS company, a lot to discuss there. But I bought those two Amazon 300 calls at $1.79 a piece. So when I'm buying calls and I feel like the market is mistreating stocks, essentially, meaning they're way overvalued for their current price or undervalued at their current price, and there's a lot of value to gain, and I think the market's gonna pull out ahead, I chase my calls every now and again. Meaning, I was originally buying Amazon calls at like $2.50, somewhere in there. It went down to 179. I bought two additional calls. That's just what we do. We lower our dollar cost average, or our cost average for each individual call or stock, and we continue buying. So I bought at 179. I sold at 4. That's over. I doubled my money. I know it's not really a significant amount when you're talking about $700 total, but I'd take $1,400 over $700 pretty much any day of the week. And with that being said, we're going to continue moving on, and it's going to pull up a price chart here of Amazon. Amazon was trading in down by that $200 range, and it's a massive gap up here, right around where I was buying and selling, right? So I was buying all through here, and now we are starting to pull some of our profits. Don't be scared to pull profits. When you're at over 100% gain on something, wouldn't it be nice to retain some of it? Don't just wait for the market to collapse again and use some of that money. You got to set money aside for taxes. Don't forget that, especially if you're doing any kind of day trading. But at the end of the day, we reinvest some of that money. So that's going into some of my other buys, in which case you'll see later on in the video. Does Amazon have more growth from here? Absolutely. I can see Amazon getting back to that 250 mark. Am I pulling my gains as we go? Absolutely. Am I still holding on to my Amazon shares? Absolutely. But it was a good opportunity for me to remove some risk from the table, meaning those call options at a profit to be able to call to cover some of my other purchases. And that's exactly what we did. Moving into the next stock, that's actually going to be Big Bear AI. I made a purchase on Big Bear AI on April 10th at $3.35 per share. And Big Bear is doing a lot of good things. They're adding some experience to their leadership team, which is fantastic to see. I think they got a lot of good things ahead of them. We're still trading around a resistance at 332 and 350 ish. And anywhere under that 350 mark, I think, is a great buying opportunity. I see Big Bear going back up to that $6 to $7 mark by the end of the year. That's kind of where I'm holding out for. I'm only purchasing shares of Big Bear AI right now. I do have some call options, but I am no longer purchasing those. I'm risked out on those, meaning I just do not want to add any additional funds. My risk to reward is not there any longer. So I'm only buying actual shares. Moving into CRM, Salesforce. CRM Salesforce has a lot going on. They've been down drastically the last couple of days. I picked up 2 more shares at 169.64. And you can see right here, they just kind of had a massive sell off and they continue moving down. This is the lower resistance right here that I would see us possibly moving to, and that's going to be around 150. If we drop down to 150, I'm going to back up truck and continue picking up Salesforce, but at a much larger magnitude. I think Salesforce has a lot going for it, especially in the AI field. I think people are overreacting to the AI versus SaaS companies. We're going to move into ALOY, which is Realloys. Realloys is what I'm going to call it. But in Alloy, I picked up 50 more shares at 781 on April 9th. I'm going to continue picking them up. They are going to be my introduction into the rare earths, especially here in the United States. You can see we have a lower resistance right around 750, and we've been bouncing around. They are up pretty significantly, 20% on Friday almost. And I see us going back to $20, $25, somewhere in that range. So I'm going to continue picking them up, especially when we stay down around the $10 range. I think it's a great buying opportunity. They're also getting watched by some of the analysts, and they're giving a stock price at $35, I believe, right now. I don't see that happening because of the fact that they don't really have earnings yet, or the production is still ramping. It's not actually full blown, which is going to cause a lot of hesitation on investors' side, which is absolutely fine. We're trying to have Realloys as a preemptive buying before everybody else does, right? Long shot, right? Very speculative, but I'm in on it. I think the United States has to start processing their own rare earths and get back on being more self sufficient. And this is one of the steps in the right direction. I also bought Elf Beauty on April 10th, 15 shares at 64.76. And we'll get into the chart here. They are already up slightly, $1.20, almost 2%. And we are trading right above a resistance marker. And I think that ELF has very good profits and very good books. I think they're going to do very well in the future. So as they keep staying around this mark, anywhere under probably 75, $80, I'm going to continue buying. That's actually where I was buying back here when they were over $100. I'm hoping we're going to be seeing them over $100 again this year. They obviously are, when the market turns and shifts, they are in the add-ons, so the consumer side of things. Once people have extra money, they're going to be buying more of this kind of product, which is fine with me. It's a great indicator. This stock is a great going to be a great indicator of when the sentiment is starting to shift. Palantir. I actually, in some of my previous videos, you can go back and watch. I see Palantir being stuck in a price range. 120, somewhere in that range, is going to be on the lower side. So as we drop back below 130, I'm going to be picking up some call options on Palantir. I'm going to ride them until they're 160 to 180, somewhere in that range, and then I'm going to sell. It's just a small little cycle that I'm doing. I'm going to do it until it stops working. And right now, I picked up on April 13th 2 call options at 175 for Palantir. Uh, that was $6.45 per option, so a little over almost $1,300 to pick these two up. I'm anticipating to be selling these within a few weeks, but Palantir is also stuck in the SaaS apocalypse. People are kind of putting them in the same boat as all the other SaaS companies. And then you got Trump saying good things, which is going to cause them to be hated in the market because they're defense, right? So anytime people are against what's going on, the war, politics, whatever it is, then Palantir is going to get hurt. And that's where I'm trying to benefit from it. Not saying I'm trying to benefit from more, I'm just trying to benefit on the expectation and what people are actually viewing it as causing the price to be deducted in a company that actually is not causing any of the problems. They're just benefiting from and getting hurt from. All right, so Palantir, you can see they were just at 160 and then they came crashing down, crashing down, crashing down. So we're right back at this resistance marker. That's right around the 130, anywhere under 130. I'm going to pick up some of these call options and I'm going to hope that we come right back up and have a pretty drastic bounce. If we do not, I will pick up more all the way down to this lower resistance. All right, SoFi. I also bought SoFi on April 10th, 25 shares at 16.5. SoFi is doing great things. I think they're going to be merging new technology with old, so fintechs, and they're getting into the cryptocurrency lending, things along those lines, which I think is fantastic to see. It is my choice in the financial market that I am just a complete buy on them. I'm a buy anywhere under $20. $20 is kind of, there's not really a resistance there, but I think it's just too good to pass up. So I am a buy on SoFi. SoundCloud AI or SoundHound AI. I don't know why I always call it SoundCloud. SoundHound AI. I bought 90 shares on April 10th at 669 per share, and they are right above their resistance here. I do see them going back up to this $11 mark. I think that is where they technically should be priced right now, looking at their books. That's what I anticipate. So you're talking about a $4 upside to right now. That's what I'm buying for. And they're getting more contracts across the board. They're gaining some momentum in customers and things along those lines, which is going to only be good for them once it actually starts paying off. I see a lot of good things from the AI side, and this is one of the infrastructure portions that is going to be needed anywhere when it comes to AI. Nike reported earnings. Everybody hated it. They didn't get what they wanted out of China. They saw bad things, but I saw that they are still working on their turnaround, and I see great things coming from them in the future. Just like Elf, they're more on the consumer side of things. So once the market sentiment starts shifting and people have excess money once again, Nike's gonna start seeing those profit gains, the margin gain, their sales are gonna go up. That's my opinion. Do your own research, please. But I am a buy on Nike. So I picked up 15 more shares at $44.02 on April 10th. And you can see by the chart right here is when they reported earnings, and they just right on down. And with that being said, it, in my opinion, is a great buying opportunity under this $65 mark. And we're getting down to the bottom of the barrel. We're actually down even more from when I purchased, which is absolutely fine. That's why we DCA in. But you can see we actually are right at the 52-week low, which a company like Nike, they're going to be around. They're going to make it through. They're the best of the best when it comes at what they're doing, the sports apparel, things along those lines. You got new leadership running things, turning their books around. AMD. All right, so now we're getting into some of the charts of where I sold. I sold call options. I did not sell my actual shares of AMD, and I still hold some more call options. I do see a lot more upside potential. We bounced off that 150. We didn't quite get to 150, but we bounced right off that resistance on the downside. You got a lot of people who have been buying down here at the 200 mark. They're going to see that profit margin and they're going to start selling. You got to pull your profits. I pulled some of mine on my call options. The way I view it is when my call options go up past a certain point, it's a great opportunity for me to sell and reduce my overall risk, meaning I could go to zero and I didn't gain, I didn't lose. That's kind of the whole point of my own strategy. And right now AMD is doing great things. All that spending, all the capex spending from the Mag 7 has got to go somewhere. It's going to Nvidia, it's going to AMD, it's going to Broadcom. All these companies, they are needed. And AMD is yet to see the full growth potential. That's where I'm at. Do I see them going up to $275, $300? Absolutely. Or Will I have all my call options at that point? No. Will I still have all my shares? Absolutely. And if they drop right back down, I'm going to be picking up more shares, not call options. Once my call options are positive, I'm not going to continue buying. I'm waiting to sell those. When we have down days, I may still be picking up individual shares. All right, ServiceNow. ServiceNow, you saw that I sold at 102.91, I believe. They got hit hard by the SaaS apocalypse that's going on. Now, they put themselves right back into buying territory for me. They broke down below that 105. I'm full blown sell or buy, buy on ServiceNow. I'm going to be picking up more shares. I have not yet. I believe Monday, Tuesday is going to see a even better buying opportunity for us to get us back down towards a little closer to that $80 range. I'm going to be picking up shares at that point. Once again, I made some sells and I pulled some of my profit, set it aside for taxes, things that I got going on in my own life. But that's where my purchases are coming from. And that's where, if I can sell off some more at a profit, I'll be picking up ServiceNow to reinvest into better value companies at lower prices, and we can just keep moving from there. I understand without holding for the long term, you might miss out on, Amazon calls. I sold them at $11 per call. They might go up to 13. Yeah, it's a missed opportunity. But if I take that money, I put it in ServiceNow, and ServiceNow goes back up to 150, then in reality, I'll be ahead in the long run. And that's what we're going for. Reducing my risk, increasing my reward, and also making sure I'm pulling my profits. Trade Desk is also a buy. They came right back down to that $20 mark. They're almost to their 52-week low. A lot of people are a sell on Trade Desk. I think that their books are plenty good enough. Once we get through the SaaS apocalypse and um, we start seeing some of these companies for the actual value that they have, I see good things for Trade Desk. I think we'll be back up to that $35 to $40 mark by the end of the year. So I am a buy on Trade Desk as well. Adobe also hit by the SaaS apocalypse pretty heavily, along the same lines with all the other companies. We're coming down. We're approaching that lower resistance that I got set up. $200. It's kind of crazy to be able to buy these kind of companies for these prices. I'm a buy on Adobe. I'm going to be picking up. I did make a sell on Adobe so I can start purchasing again without a wash sale on the 16th. So I'm holding out for that, but I did purchase some call options for Adobe so I can kind of get around it a little bit there. And PayPal, and we're getting to the end of it here, but PayPal has been bouncing around. They're just above their 52-week lows. I think we're right around this resistance of that $45 mark. Um, they're still a buy for me, but it's way riskier than some of these other stocks, which is why they're towards the end of the list. I think they're going to get bought. I don't know by who, I don't know when, I don't know where, how much, anything along those lines, but I do see them being open to an opportunity to be bought. That's where I'm at with PayPal, and that's why I'm good picking it up the lower it goes, because increasing the likelihood of it being bought, the lower it goes, increases the likelihood of me being able to pull some profits out of it. And then last but not least, Rich Tech Robotics Class B. Robots are going to be a part of the future. That's fantastic. There's going to be a lot of usage of robots in shipping and receiving, warehouse, anywhere and everywhere. And they just got a contract for in Europe, so they can expand in Europe, which has a lot of good things ahead of it. They do currently have a lawsuit going on for a pump and dump scheme where they said that they were better partners with I believe, Microsoft or Google. Whereas then they really weren't. It was just a regular partnership to them, not as hands on as Rich Tech made it sound. So they are in the middle of a lawsuit um, over that, which is fine. And that was the end of the slideshow. If you enjoyed any of the video, if you found some good knowledge with it, please like, subscribe. It helps out a tremendous amount. Send the video to some friends, get the views up for me. That'd be awesome. And I will see you guys in the next one.